Hello everyone, welcome to another session on dollar INR. Today I am going to talk about dollar INR, but let me first start with Brent. Okay, because this has been the major driving factor for the rupee for a very long time. Let us look at the chart of the Brent. Remember, this is a 6 hourly chart. Okay, so it is on Brent crude oil. We have seen how the prices had surged higher when the war started. Then we have seen a decent amount of volatility. But what we have noticed is that there's a support, big support between 87 to 89. Okay, big support between 87 to 89, and you can see it very well. Multiple times it came down and got higher, came down and got higher. But today, very good news, that support kind of broke here. If you look at it, today's low was around 85.25, 23. Okay, so it's a good $2 lower than that entire support region. Okay, so that looks that there is some kind of a solution to what the chaos that we have seen in the Middle East. So cooling crude is very good news for the rupee as well as for the world. And now let us jump back to the rupee and see how it is functioning here. Okay, let me show you this chart first. Okay, if you look at it, we are following this upward sloping linear regression channel very closely. The prices are moving in that range, except a brief period here where it went above. But look at how things are moving. We have seen rupee weakening here, going to almost 97. Okay, almost 97, 96, 95, 97, and then coming back, and now we are stabilizing around the 95 range. Okay, and that is a very important level, the 95 level, because if you see in the previous wave when it went, it had gone as high as 95.22. Okay, so this particular level was 95.22. Now after that the prices came down and broke higher, went to 97, and again when it is correcting, it is finding support at a previous resistance. Okay, and this is a classic reflection of what we call as the principle of polarity in technical analysis, where previous resistances become current support. Okay, so we see some kind of a support region around the 95 level. Okay, now let me show you another chart. This is the dollar INR, same chart, but I have put different indicators here. Okay, now let me show you the first indicator first. Okay, now let me show you this. I will hide this up. Okay, now this blue line is the 25-day moving average, and the orange line is a half percentage filter below the 25-day moving average. And if you see, since almost last 1 year or so, 10-12 months, this and this region, wherever it goes, it has been showing a good support level for the dollar. Dollar comes down and then goes higher again from that region. Okay, so this is the support, and currently the dollar INR is in that support region. Okay, so for dollar importers, that could be a good opportunity to explore hedging. Okay, but I want to show you some things more than this. Okay, not only the 25-day, I want to show you the 50-day as well. Okay, now this is the 50-day moving average. Okay, now the green dotted line is the 50-day moving average, and the red dotted line is the half percentage filter below the 50-day moving average. Okay, now remember, RBI and the Government of India have taken various steps to help and support the rupee. I am sure that will bring in a lot of dollar flows and it will help support the rupee. Okay, so in that case, there is a slight bit of change in dynamic. It could be that the dollar INR might come to this range. Okay, and this range is 94 to 94.50 range. Okay, here if you see historically, again here very important support, same region, here again support, here it did not come to that level. So looking at the current circumstances, when the crude is correcting, the Government of India, RBI taking a lot of measures, inviting FCNRB inflows and ECB inflows as well. So rupee might stabilize a bit, and we might look at levels around 94, 94.50. That is the region where the dollar importer should look to hedge, and hedge for quite decent amounts. Okay, if you want to hedge at the current level around 95, you can look to do call options, fewer forwards, more call options. But if rupee comes to this range, okay, this range between 94 94.50, then that is the level where you can hedge, increase your hedge, and use more of forwards. You should certainly look to use options as well to get flexibility. Okay, for dollar exporters, okay, we have seen a continuous rupee weakening and you have enjoyed the rupee weakening. I would suggest levels around 95 95.50, you should increase your hedge ratio. You know, a lot of exporters, because of the rupee weakening, had kept a lower hedge ratio. I think you should refrain and change your strategy a bit, move according to the dynamics of the market. Here you should look to increase your hedge ratio and do forwards and put options both. Okay, don't keep yourself under hedged. RBI is taking a lot of action, Government of India is taking a lot of action. So the mindless rupee weakening that we have seen here, you know, almost for a year plus now, that doesn't look to happen again. The effects, these, you know, measures that government has taken, it will have its effect and rupee might recover a bit. Again, Middle East worries also looks to be, you know, gradually subsiding, but you never know when a re-trigger might happen. But bottom line looks that we might see 94 94.50. So exporters should look to protect themselves using forwards and vanilla puts as well. Okay, so that is it from my side. Have a great weekend ahead.